Hey guys, it is Mark Coe for the 6th of February. Just wanted to look at a little market update and talk about a few of the lessons that were taken away. It's been a really great experience to start out 2019. We have several new subscribers to the room, and I've noticed a totally different energy. And I think part of it is that I'm getting better describing it to them, and people are grasping it. So I want to share with you kind of what we're looking at and how that's working out. Let's take a look at E-minis. E-minis are a market that we looked at on Sunday evening this week, or I guess Sunday morning this week, looking with the focus of wanting to be a seller. And everything I operate with, the idea is that I want to be dealing at zones. And kind of the difference in my mentality or my approach versus a lot of what people may learn in the marketplace or come up with on their own is the idea that I'm dealing against levels that have been shown to us in the market, therefore, in my viewpoint, are very powerful in using them on the next approach. So the idea walking into the market on Monday was that we wanted to look at opportunities to sell the E-minis. And we had some opportunities on Tuesday. And what I like about it, and let me just get down, so I want to get down to a little bit tighter time frame here and show you, because it happens intraday in the way I'm looking at it here. But the levels that we lean against, right? So first trade, it took two trades or two levels on Tuesday. The first one being 27.27. And that was right here. And 27.27 came with a real tight stop. It's about a 3-point stop. Got stopped out, lost 3 points. Not a big deal. You're down 3 points to start your Tuesday. Next level was up at 27.37. As you'll see, what happened at 27.37? Big rotation. All right. So think about what's going on now as you come into late afternoon Tuesday. The 27.27 level is meaningless. It broke. It didn't have the implications we designed it to have. It's now out of the way. However, 27.37 is still working. And what develops again later in the day? A new bottom edge area, which means support. And this is constantly how we're looking at the market. How are buyers or sellers reacting at levels? And what we define it as in the short term is that sellers are controlling this top edge. And we'd had this level on our screens for several days, so this was not our first look at 27.37, but really the value in the analysis that we provide. So it really is able to transform your trading to understand, hey, once we trade up against this level, I have an opportunity to be a seller at a top edge. Well, look at the reaction. First reaction you get was a 15-point move, right? 15 points times a S&P contract's worth $750. As I always say, you're not expecting top tick and bottom tick, but the question is, what can you take out? What do you call the meat of the move? And to me, the meat of this 15-point move is really something closer to 10 or 12 points. Again, a profitable venture. Same opportunity late on Tuesday. Now fast forward into Wednesday, which is what we have today. Same exact level, right? The same 27.37 still holding, same 27.22. And what you get is multiple rotations off that level. So the idea is that the E-minis may break this 27.37. They could trade up another 100 points. But you've gotten so many rotations, even smaller picture rotations within this, that it's really challenging to look at this edge as anything other than profitable, even with an eventual stop out. The idea being is that you're not going to give up more than a few points. So remember what happens. So you started out at 27.27. You give up 3 points. You can totally live with that. All of a sudden you see a 10 to 12 point winner, so now you're positive. You repeat the same winner, positive. You repeat the same winner, positive. And then it kind of takes you into the middle of Wednesday. And we kind of sit middle of the road here, and the opportunities are to, again, wait for edges. And this is how it looks on a shorter term picture. Again, everything I go through on these Sunday sessions sets it up for the bigger picture. How do you want to dial into that? And then what we're looking at intra-week, what people are really grasping is how to deal these things. And the lesson I went over today was that a lot of retail, and you guys will probably find yourselves doing this. When I draw zones, I teach everybody how I draw the zones, but when I draw the zones, and I'm always grabbing from the highs to the candle opener closes, and that's where it's coming from, so there's always a reference point. What retail typically is looking for, they're looking for trade to occur in there, and then they want to see something happen. And the difference, the approach I'm taking, is that trade into that zone is what's happening because the sellers are telling you they're not letting it go through that level. So that becomes your opportunity to deal. So this is just one market by Wednesday of the week where you're looking at a couple $1,000s on one contract. Pretty amazing stuff for a $500 a year subscription. So anyway, guys, crude oil, a lot of markets are kind of trading, I'd say, more range bound today, but we are seeing some extension lower in euro, and we'll see how we trade into Thursday. But again, stay with the level, stay with the zones, and keep it going. So cheers, guys. Have a great day.